Hi, welcome to August and the Huntsville Market Report for real estate in Madison County. Well, the numbers are in. No, I'm not talking about the preseason college football poll. Not much change there. Season starts in just 3 weeks, by the way. Economic numbers are in and they are different. They're going to affect your real estate market, and we're going to take a look at how. Let's check it out. Well, we're in August and it's starting to cool down. Our economy is cooling a little bit as well. As we talked about last time, the rule of thumb for a recession is 2 consecutive negative quarters of GDP. And that has occurred. Now, this is an election year, so some folks may change the definition of a recession to fit the election. But if we don't have a recession after 2 consecutive quarters of GDP growth or more, it'll be the first time in 70 years that hasn't happened. So we're going to assume that we are going to have a recession, and we want to take a look at the real estate market and how does that affect the market in Madison County. We're going to talk about specifically home inventory, home prices, and mortgage rates. I can use just one slide to illustrate inventory, and it's rising inventory. We haven't seen builder bonuses for realtors in many, many years. We didn't have builder bonuses in the couple of years preceding the recession from COVID. But yes, the builders have overbuilt in our market a little bit. Now they do have product on the ground. Builders get nervous in a hurry. They're very nervous Nellies, and they want to get that product sold, the completed homes. So we are seeing now realtor incentives to move that product for the builders. The product for the builders is going to take care of itself. This is a look at builder construction, residential construction recently. Building permits, as you can see, peaked back in December, and they've been declining since then. Housing starts peaked in April, and they tanked in May and June, and I think it'll be the same in July. Under construction properties, this is nationwide, have leveled off, and housing units completed have leveled off, and they're going to start to decline as well. So this excess builder inventory won't last long. In our market in Madison County, we're a little atypical. Typically, about 10% of the market is new construction. In our market, it's more like 30 to 35%. So we have a lot of new construction in Madison County, and we have now more homes on the ground ready to move into than we've had in years. We just finished July. Here are the stats from the Board of Realtors here in Huntsville and Madison County. 1,273 homes on the market. Now, this includes new construction and resales. And so my headline would be, if I were trying to grab eyeballs, new and existing home inventory up 96%. And that's pretty staggering. But all that means for Madison County is that we went from about 4 weeks inventory last year, 3 to 4 weeks at this time, to about 6 weeks inventory this year. So we're only at 1.6 months inventory in Madison County. Now, as you can see nationally, it's averaging about 3 months inventory. That's the national average today. And I like to use this chart when I can because everyone remembers when we start talking about recession, we all think about the Great Recession. The Great Recession occurred in 2008. Prices plunged. Then more inventory hit the market in 2010 when those bad loans were foreclosed on. So you can see that we're a long way away from the inventory conditions that we had in the Great Recession. This is where we were back in 2008, 2010, 10, 11, 12 months of inventory. Nationally now we're at 3, and in Madison County about half of that, about 1.6. Case-Shiller, this is going to be the headline for pricing going forward. Home price increases moderating. And that is the story. Price increases are moderating. Home prices are not declining. Price deceleration is not price depreciation. A lot of folks are saying, I'm going to wait and buy when the market crashes. There's not going to be a price crash in our market. Price acceleration is going to decrease. In Madison County, for example, we price everything price per foot. I think it's because we have so many engineers in our market, but each market's a little bit different. But our market is definitely a price per square foot market. So when we look at where we were a year ago, we were averaging about $155 per foot, homes on the market. Today, we're at about $167. That's only, and I say only, about an 8%, 7.7% appreciation year over year. And as you remember, in the last few months, we've been talking about some year-over-year appreciations of 18, 19, 20%. So yes, price appreciation is going to decelerate. We want to go back to a normal 3, 4, 5% a year appreciation. That's what we expect from real estate. Recession doesn't equal a housing crisis. If you're watching this video, there's been one time in your lifetime when real estate acted poorly, and that was back during the Great Recession, which started in 2008. These are the last 6 recessions, and you can see there was one that was minus 1.9%. But if you take out the Great Recession, and we've talked about many times why this is nothing like that, home prices actually perform very well during recessionary periods, and I think we're in for that same situation here. Here's an updated forecast from the major forecast companies in the real estate industry. Averaging about 10% is what they're looking for price appreciation for this year. Maybe a little bit less because of the recession kicking in. You saw in Huntsville we were at about 8. That probably should hold steady for the rest of the year. So, but a very good year of price appreciation. Odds of home prices dropping. This is a study from CoreLogic. You can see that in our market here in Alabama, very low to low odds that we're going to have any drops in home prices. Now, there are going to be some areas of the country where prices are going to fall. And that's the reason I like this particular map, because it's showing you the specific areas. Up in the Northwest, in the Northeast, you do have some areas that are going to have some price depreciation. And you can bet your bottom dollar that will be all the news. All the national news will grab onto those markets where prices are declining, and they're going to make it sound like it's all over the country, and that's not going to be the case. In Alabama, most of the area down here is in very low or low probability of price depreciation. Throughout history, in a recessionary period, mortgage rates or interest rates start to move up during the recession. And what happens is the Federal Reserve raises rates too high. They eventually roll the economy over. They throw it into a recession, and then they have to start decreasing rates to stimulate the economy to grow again. And that's exactly what we're seeing now. These are mortgage rates from the beginning of the year, and you can see that we started out in the 3s in January. Before we ever started talking about a recession, mortgage rates were on the way up. The bond market knows more than just about anybody else, and they were already raising rates in the bond market before we ever got the first quarter of negative growth, and certainly before we have this recent report of the second quarter of negative growth. This looks like a peak to me in mortgage interest rates. And this actually, if you remember from a month or two ago when we did a report, this actually got up over 6% on an inter-week period. These are weekly rates, but during the week that actually got up over 6%. And we said at that time that looked like a short-term peak. It looks like it may even be a long-term peak. But nice drop in interest rates last week, back below 5%. Very good news for home buyers and investors. Investors slowed a little bit as those rates ratcheted up, but as they're starting to fall back down, they're getting more active. A recession basically means falling interest rates. Once these rates peak, as the Federal Reserve keeps raising rates, the interest rates will peak before the Federal Reserve stops raising rates. And once that happens, they're going to be stable for a while. Then the Federal Reserve will start lowering rates, and that means mortgage rates will decline. So I think that we have seen the high in mortgage rates for the short term anyway. We'll have to keep monitoring that. But historically, in a recession, that does mean that interest rates, mortgage rates are going to decline. Here are updated projections on mortgage rates for the next year. And as you can see, they look very good. 5% is an outstanding mortgage rate. Generational lows. The abnormal rates that we had through the pandemic, the high 2s, the low 3s, those are once in a lifetime. I don't believe we'll ever see those again in our lifetime. But a 5% mortgage rate is outstanding. And that's, again, great news for buyers and investors. So what do we look at ahead? What's the bottom line? The bottom line is there is still not enough homes on the market. Now, this is a national chart. And you can see that nationally we're looking at about a 3-month supply of inventory right here in green. Well, in Madison County, as we've already shown, we're about half of that, 1.6 months in inventory. For everyone thinking about the Great Recession or thinking back, waiting for home prices to crash, just take a look at the comparison of where inventory was back during the Great Recession and where it is today. We're nowhere close. So that's not a realistic expectation that you're going to see significant price drops in home values. This is from Moody's Analytics. I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. And that's the reason that we looked at this chart earlier. There are going to be some areas that are going to have price decreases. And those are the areas where the media is going to focus. You just have to be aware of what's going on in your market. Mortgage rates fell after the GDP report, showing that we have 2 negative quarters in a row. 30-year mortgage rates saw the biggest weekly decline since 2020, which was our last recession, in the COVID recession. So mortgage rates appear to be stabilizing at least, and at best, possibly on the way down. Now here in Madison County, this is our buyer index, our market action index, which kind of shows us the velocity of the market and what type of market we're in. You can see it was still very hot back in January, February, March, April, but it has tapered off and slowed down since then. But we're still at 62, which is still a strong seller's market, and a long way to go before we get to a neutral market. We have a lot of resources on the website to help you with your real estate needs. If you're thinking about a move, if you want to invest in the Huntsville market, reach out. We'll be glad to help. Let's go out and make it a great day. Thank you.
Oh.